China is hitting back at Washington for its support of Hong Kong protesters. Beijing says it'll sanction some American non-profit organizations and freeze U.S. port visits. Joining us now is Jeff Black, Bloomberg's head of Greater China Economics. And this is something the market's been wrestling with ever since we saw President Trump sign this bill, isn't it, Jeff? The extent to which this was going to start to impact on the trade story. Do we see China joining these conflicts together, the trade negotiations with what's going on in Hong Kong?
Good afternoon. Well, that's exactly what they appear not to be doing at the moment. This response looks pretty moderate on the face of it. And of course, specifically, what they're not doing is walking away from a phase one trade deal or making more threatening noises on what they want from a trade deal with the US in response for what, you know, by all accounts was a fairly serious meddling, as the Chinese call it, in Hong Kong affairs. So for investors, that's positive because that shows China is still at the table and is still focused on getting a phase one deal done.
And where does the data that we got over the weekend, Jeff, leave us?
Well, it leaves us possibly at the beginning of what could be a moderate recovery going into 2020. We wouldn't get too excited just off the back of the PMIs. They can overreact in certain circumstances. And of course, there was a bit of seasonal impact in the data that we saw at the weekend. However, the Caixin PMI, which came out this morning, and that's a bit more focused on the private sector, confirmed the trend, though, and that's encouraging. When they go in different directions, you worry, but there could be some cautious optimism going into 2020. A lot of reasons to be cautious, particularly deflation, factory deflation in China. That's one to keep an eye on.